Welcome to the Friday edition of Tech Stocks Daily, where the pulse of innovation meets market motion. Today, we're diving deep into Microsoft's leap into the AI-driven future, shaping a tech renaissance that's rattling Wall Street. Google isn't far behind, with its AI Opportunity Fund set to democratize the future of work, alongside its shimmering Q1 earnings. But it's not all smooth sailing. Autodesk finds itself in murky waters with legal challenges over its financial practices. Meanwhile, Spotify dances between optimism and market skepticism, balancing strategic moves with investor caution. And to top it off, we'll wrap with a look ahead, deciphering what these developments spell out for next week in the tech sector. Strap in for an electrifying ride through the highs and lows of today's tech stock market. Microsoft finds itself at the epicenter of tech's latest boom. In a moment that could very well be defined as a pivotal turn in the annals of tech evolution, Microsoft has soared into the limelight, demonstrating with full force why it stands as a beacon of innovation in the industry. Their latest financial disclosures and strategic movements tell a story of a company not just thriving, but leading the charge in what many are calling the global tech renaissance, particularly fueled by advancements in artificial intelligence and cloud infrastructures. The Redmond, Washington-based tech giant reported a stunning surge in their shares after delivering a robust quarterly earnings showcase, which not only surpassed the high expectations set by Wall Street analysts, but also underscored the company's savvy investments and burgeoning dominance in AI. Revenue skyrocketed to $61.9 billion, marking a 17% increase, driven substantively by its intelligent cloud segment that includes the ever-expanding Azure. Notably, Azure itself reported a substantial 31% growth, outpacing predictions and highlighting its role as the cornerstone of Microsoft's cloud empire. Underpinning this financial success is Microsoft's strategic pivot towards AI, a move orchestrated under the aegis of CEO Satya Nadella. The company's partnership with OpenAI, the architects behind AI sensations like ChatGPT, has positioned Microsoft at the very frontier of technological innovation. Copilot, Microsoft's AI-driven platform, has been commended for spearheading a new era of AI integration across various industries, enhancing efficiency and fostering innovative outcomes. Aside from its impressive financial metrics, Microsoft has been in the news for its strategic collaborations and expansion plans. One of the most talked about alliances features Microsoft and Estée Lauder coming together to open an AI innovation lab. This move signifies a leap towards reimagining the beauty sector with AI at its core, promising a future where personalized consumer experiences are the norm, bolstered by Microsoft's AI and cloud capabilities. Furthermore, Microsoft is steering the gaming world into new territories. Their acquisition of Activision Blizzard is already paying dividends, with gaming revenues swelling by 51%, largely thanks to iconic titles like Call of Duty and Candy Crush. What's remarkable here is Microsoft's vision of seamlessly blending entertainment with technology, marking a significant milestone that saw Xbox content and services revenue jumping an eye-watering 62%. Beyond its financial triumph and expansion narratives, Microsoft is influencing the broader tech terrain. The buzz around AI as the fourth industrial revolution got louder, with tech pundit Dan Ives marking the current phase as a 1995 moment for the industry, credited significantly to giants like Microsoft and Google blazing a trail in AI integration and infrastructure. Microsoft's narrative in today's tech conversation is much more than a tale of numbers. It's about setting benchmarks for innovation, fostering collaborations that transcend traditional industry boundaries, and envisioning a future where technology and human ingenuity converge to create extraordinary possibilities. As AI continues to shape the fabric of various sectors, Microsoft's recent endeavors serve as both a beacon and a testament to what's achievable when technology is leveraged with foresight and ambition. All right, tech enthusiasts, let's dive into why Google's been grabbing the headlines across the tech universe today. First up, Google's stepping up its game in the AI realm with a massive training initiative. What we're talking about here is a whopping $75 million AI Opportunity Fund, aimed at democratizing AI skills among workers. This initiative isn't just waving the AI Enlightenment flag, it's practically a movement. They're offering a Google AI Essentials course on Coursera, and it's not just for the tech-savvy or AI nerds. No degrees or AI experience required. It's open to anyone with a thirst to learn about AI, from foundational skills to identifying biases. And the real kicker? It's aiming to reach at least 1 million Americans. That's a game changer, folks. Google's not playing in the sandbox anymore. They're building castles. But hold on, because Google's also giving Wall Street something to chatter about with their Q1 earnings announcement. The figures made analysts do a double take, boasting an out-of-the-park revenue of $80.54 billion, stomping all over expectations. Impressive is an understatement. And surprise, surprise, they teased us with their first ever dividend, alongside a cool $70 billion buyback program. Google's like that quiet kid in class who out of nowhere aces the test and nonchalantly heads back to their desk, like it's business as usual. Beyond the balance sheets, Google's fine-tuning the Chrome experience for the enterprise with a new shiny Chrome security subscription. At $6 per user per month, businesses can now amp up their defense against cyber threats, an offer quite hard to scroll past considering the ever-looming cyber gremlins. And let's not wander too far from the rumor mill that's been working overtime. The upcoming Google I/O conference scheduled for May 14th. Big reveals are expected, including the much-anticipated Android 15 unveiling and possibly dropping some juicy details on the Pixel 8a smartphone. Google's definitely getting the hype train rolling full steam ahead. For those questioning Google's prowess in the AI turf, CEO Sundar Pichai made the airwaves buzz with confidence following a stellar first-quarter earnings report. AI first since 2016, he reminded everyone, pointing towards Google's relentless drive and positioning in shaping the AI future. Last but not least, amidst growing demands in tech evolution, Google hasn't turned a blind eye towards its older-gen Android device users. They're extending Gemini AI app compatibility down to Android 10 and 11, ensuring the tech is not just for the latest and greatest in the device world, but for everyone. Suffice it to say, whether it's through groundbreaking AI initiatives, financial victories, enhancing user security, or spreading AI capabilities far and wide, Google's script today read like a blueprint on staying not just relevant, but dominant in the fast-paced tech renaissance. The overarching narrative? Google isn't just participating in the tech evolution, it's choreographing some of its boldest moves. Buckle up, tech world, Google's stirring the pot, and the simmer is set to bring to a boil some exciting developments in the realm of tech. Today, Autodesk took center stage in the tech news for reasons that have investors and watchers of the NASDAQ-listed company on alert. The software giant, known for its 3D design, engineering, and entertainment software solutions, finds itself under legal scrutiny over its financial practices. A flurry of class action lawsuits has been filed against Autodesk, stretching from the halls of New York to the courts of California, with leading law firms such as Bronstein, Gewurz & Grossman LLC, Gainey McKenna and Eggleston, Faruqi & Faruqi LLP, and Hagens Berman spearheading these actions. Each lawsuit alleges that Autodesk made materially false and/or misleading statements and failed to disclose issues related to its free cash flow and non-GAAP operating margin representations. The woes for Autodesk began with an announcement on April 1, 2024, that they were unable to file their annual financial report on time due to an internal investigation into their free cash flow and non-GAAP operating margin practices. This investigation was triggered by concerns raised post their earnings release on February 29, 2024, leading the company to alert the Securities and Exchange Commission of the ongoing internal probe. This uncertainty and the subsequent admission of possible non-compliance with NASDAQ's timeliness requirement for continued listing spiraled into a significant downturn in Autodesk's stock price. The marketplace reacted swiftly and harshly, with Autodesk shares dropping precipitously following these revelations, carrying a heavy toll on investor confidence and the company's valuation. The allegations against Autodesk center around the accuracy of its financial reporting, with claims suggesting that the company lacked adequate internal controls, thereby potentially inflating its financial health. As these cases are laid out, they paint a picture of a company perhaps not as financially robust as previously perceived, drawing significant concern from the investor community who relied on Autodesk's financial statements and projections. Amidst this turmoil, it's essential to recognize the broader implications of such legal challenges for Autodesk and its investor base. The combined effect of these lawsuits places the company's accounting practices under a microscope, necessitating a transparent and thorough review to restore confidence among its stakeholders. As the legal process unfolds, the attention will undoubtedly be on how Autodesk addresses these allegations and what steps are taken to ensure rigorous financial oversight in the future. As classes get formed and lead plaintiffs established before the June 24, 2024 deadline, all eyes will be on the unfolding saga of Autodesk's legal challenges and how it manages the delicate balance of maintaining its business operations while addressing these significant legal and financial concerns. The outcome of these class action suits and Autodesk's response to its internal investigations could have long-lasting implications for its reputation, stock value, and how similar companies approach financial disclosures and internal controls. Today's tech news brought Spotify into the spotlight from multiple angles, emphasizing its dynamic presence in the financial markets and its evolving strategies for growth and profitability. Let's dive into why Spotify was the talk of the tech world today. First off, Wall Street's analysts have their eyes fixed on Spotify, with one analyst from Canaccord Genuity projecting a promising future. Despite recent fluctuations, where Spotify's stock soared 11% following a strong first-quarter report only to dip by 7% the subsequent day, optimism remains high. Maria Ripps anticipates the stock climbing to $370 within a year, signaling a near 25% upside from its current standing. This forecast hinges on recent strong subscriber growth, increased ad revenue, and strategic price adjustments across several markets, paving the way for potentially higher profitability. In contrast, monitoring Spotify's options market has unveiled a bearish trend among deep-pocketed investors, brewing a concoction of speculation and intrigue. A significant number of hefty options trades signal that something substantial could be on the horizon for Spotify. Diving into the details, there's a mixed sentiment, with a tilt towards bearishness despite the company's enduring growth narrative, backed by an impressive 602 million monthly active users by end of 2023, and its dominance in the music streaming and burgeoning audiobook markets. Lastly, Spotify's undeniable resilience and adaptability post the tech crash in 2022 have it pegged as an unstoppable stock by some. The company's strategic cost-cutting, push towards operational efficiency, and lucrative ventures into podcasting and audiobooks spell out a roadmap towards sustained profitability. This, coupled with their continuous innovation, leveraging artificial intelligence for enhanced user experience, underpins Spotify's bullish case for long-term growth. The stock's significant rebound this year, a 50% increase, echoes a strong recovery narrative, yet underlines the potential for further gains as the company marches towards its ambitious goal of 1 billion users by 2030. Spotify's journey reflects a fascinating blend of innovation, strategic recalibrations, and market volatilities. Its efforts to balance growth with profitability, especially in a competitive and ever-evolving digital music landscape, spotlight the quintessential challenges and opportunities tech companies face today. Now over to you. Viewers, what's your take on Spotify's current trajectory? Are you bullish about its future, or does the skepticism among options traders raise concerns? Dive into the comments below, and let's discuss Spotify's symphony of challenges and opportunities. Your insights might just be the playlist we need to understand this digital behemoth's next move. In today's tech landscape, the overall market sentiment is electrified with optimism, underscored by groundbreaking financial performances and strategic moves making waves across the board. Leading the charge is Microsoft, capturing the industry's imagination with its astronomical growth, particularly in AI and cloud infrastructure. Its robust quarterly earnings and strategic partnerships, such as the one with Estee Lauder, paint a picture of a tech behemoth not only thriving, but setting the agenda for the industry's evolution. Microsoft's endeavors, especially in gaming and AI, are indicative of a broader enthusiasm surrounding the tech renaissance, with the company being a central figure in heralding this new era. Google, on the other hand, has sparked excitement through a dual-focus approach, emphasizing both its financial heft and its commitment to advancing AI technology accessibility and skills among Americans. With earnings far exceeding expectations and a significant share buyback program, Google's assertion of an AI-first philosophy and its large-scale educational initiatives reflect a firm geared towards dominating the future of tech, with innovation and inclusivity at its core. The day's news is not without its cautionary tales, however. Autodesk's legal troubles concerning its financial practices bring a note of caution to the gleaming tech narrative. The class action lawsuits and investigations into Autodesk's internal controls and financial reporting underline the critical importance of transparency and compliance, reminding stakeholders of the vulnerabilities even giants can face amidst their ascent. Spotify presents an intriguing narrative of resilience, balancing cautious market speculations with bullish long-term growth projections. Its strategic adaptations post the tech crash, ambitious user growth goals, and innovations point towards a confident stride into the future, despite the mixed sentiments in options trading, revealing an undercurrent of market vigilance. Collectively, today's market sentiment encapsulates a potent mix of optimism tempered with caution. There's a prevailing confidence in the tech industry's trajectory towards growth, innovation, and expansion, particularly around AI and cloud computing. Yet, the details surrounding Autodesk and the speculative discussions around Spotify also suggest that investors and stakeholders are keenly aware of the nuances and potential bumps along the road. In essence, today's tech market paints a vibrant picture of an industry at the cusp of transformative growth, laden with both opportunities and challenges that demand a balanced, forward-looking approach. Today's tech market was a whirlwind of activity, encapsulated by groundbreaking financial performances, strategic expansions, and a poignant reminder of the tech industry's challenges. Microsoft and Google stood out with their awe-inspiring growth and deep dive into AI, highlighting the industry's bullish outlook on tech innovation's transformative power. Spotify's resilience and strategic navigation illustrated the evolving journey towards profitability amidst mixed market sentiments. Conversely, Autodesk's legal turmoil served as a crucial awakening to the importance of transparency and accountability within the sector. This day in tech encapsulates the dual narrative of boundless opportunity, shadowed by cautious pragmatism.